I'm Owen Bigland. This is the Inside Edge video blog. Okay, what's on everyone's mind here? Let's talk about interest rates and the Vancouver market here. We're into the new year, January 2023. So, of course, the big story is the unprecedented interest rate hikes that we've seen in Canada and in the United States. I've got the sheet here of all the rate increases, and they are we started this, if you remember, at this time last year, January of last year. Inflation was just starting to rear its ugly head. But of course, the governments were saying, I think it's transitory. It's part of COVID, the lockdowns that we had, the supply chain issues, all that kind of stuff. Let's just keep an eye on it. But for right now, variable rate was at 1.4, 1.5%. Yeah, I've often said on my blog here for years, enjoy these low interest rates, but eventually they're going to start to slowly go up. Nobody foresaw this 7 rate hikes in 2022. And it wasn't even on the radar at this time last year. And then on March 2nd, they gave us a 25-point basis hike. Not too much, but then another one, April 13th of 50, June 1st, 50, July 13th, 100 basis points, September 7th, 75, October 26th, 50, and December 7th, 50. And I don't think we're out of the woods yet. I think we still might have another 1 or 2, maybe 25, maybe 50 basis point hike. It took that variable rate from like 1.4 to currently sitting at 5.6, I think, right now, and might go higher. So, it's a real shock to the system. And I have most of my mortgages right now are fixed. On my investment properties, it's not too much of a concern because the interest is all deductible for me. But I do have a variable rate mortgage on my principal residence for another year and a half. And boy, it's gone up substantially. As a matter of fact, it's getting to the point where if it goes up another 50, 75 basis points, it'll probably get to the point where I'll probably look at paying some lump sums off the principal. I don't have a big mortgage, thankfully, but once it starts to get up about 6%, now you can't, that's going to be tough to do investing that money to replicate that type of return. Sometimes it makes a lot of sense to chip down the principal and pay lump sums on your mortgage, but I'll monitor it and see where it goes this year. I'll give you guys an update on it. But, a 400 basis point hike here since March the 2nd. So, there are going to be some people in trouble here. And, a lot of people, I think it's about 45% of lower mainland homeowners are in variable rate mortgages. So they have seen these rates spike up. Many of them have gotten a letter from the bank saying that, you've hit that crossover point there, the trigger rate they call it, where your payment isn't enough to even cover the interest now. So you have to put in another $500, $600, $1,000 or more to at least cover the interest portion of your variable rate mortgage. The other thing that could be some real trouble for people is people that have been using HELOCs, home equity lines of credit. A lot of Canadians have been borrowing against these lines of credit off their home, and these are floating rates that are set another 1 or 1.5% above their variable mortgage rate. So I don't use these myself, but I believe they're probably up around 7.25%. Maybe someone can comment here what the current home equity line credit interest rate is at. Again, that's floating and that will keep going up. So if we get a few more hikes this year, that could push that up close to 8%. That's trouble for a lot of people. That's a real shock. Now, when you look at where interest rates were 15, 20 years ago, as I've often said here, hey, 5.5% still looks pretty attractive. But it's where we've come from the 1.3, 1.4 up to the 5.5. That is a real shock to the system. And I've been, over the holidays here, listening to some economists and reading some articles. A lot of people are saying maybe it was a little too aggressive. I'm kind of in that camp. We needed to raise interest rates, but maybe not quite that quick. Give some people some time to at least adjust to these higher interest rates. But there will be some trouble this year. I foresee it, especially homeowners that have got $100,000, $200,000 lines of credit, and they're paying 7.5%. Will there be some forced selling? Perhaps. We'll see. I work with a lot of buyers. Might present an opportunity. I do see, I've talked about in the past here with pre-sales, some of those pre-sales that are coming due this year, some of them could be in trouble. I know they will be, because they would have, signed up for this pre-sale 3-4 years ago. Interest rates were much lower than they are now. And now maybe they're coming up for completion later this spring or later this summer. And now they're going to have to qualify at a 7.5%, 8.5% qualifying rate with the stress test. So there'll probably be some troubles in that area as well. So we'll keep an eye on it. Right now, as I speak, market is slowed. We all know that. I don't really like to go on all the stats. You can get those anywhere. But home sales have really slowed, although inventory is also way down, and we're just coming out of the holiday season. Over the next 6 weeks, I'm probably going to be listing 4 or 5 homes. So I'll have a much better beat on this, where we're at with buyers and what kind of offers I'm getting, if any, and where the market is from the front lines here over the next month or so. Stay tuned. What I will tell you, though, I had 2 sales in mid-December before I left for vacation. And both were a 1-bedroom and a 2-bedroom in downtown Vancouver. I had multiple offers on both. These set a fairly high price, very close to record price. I know, crazy. But this one did have something going for it in that the strata allowed legal Airbnb, and that was the draw for these. That people could, if they wanted to, live in it part-time and then rent it out on Airbnb. And there's not a lot of good quality stratas that allow legal Airbnb. They're pretty limited. So that was the big plus that I had. But as far as 1-bedrooms go, high quality 1-beds downtown are still in a seller's market, folks, believe it or not. Actually, a fairly strong seller's market. Overall, 1-bedrooms in downtown Vancouver are a sales to active listings ratio of about 21. So still in seller territory. But if you siphon those down to the real high quality ones that I often talk about, it's probably closer to about a 25. So pretty strong seller's market in the 1-bedrooms priced under, let's say, $750,000, $800K. 2-bedrooms under $1 million, still pretty good market. It's when you get into the higher price categories, the luxury condos over $2 million or over $3 million, those are going to be are much more influenced by these interest rates. And I would probably say that these interest rate hikes, there's always a little bit of a delayed effect to it. Probably have not been factored into the current pricing right now. So it'll be interesting to see where this goes. It'll also be interesting to see what kind of narrative we get from the Fed here as we move into winter. Do they give us maybe one more 25 basis point hike and then do a pause? I see a lot of economists down in the States saying that they're going to pause after one more hike, and don't be surprised if you start seeing rates come down a bit in the fall of this year. I don't know if that's going to be right, because inflation is being pretty stubborn here. So there's a lot of things at play here. I'll give you guys updates as we move in from the front lines here. As I say, new year, getting ready to list a lot of homes here coming up. I've also got a number of buyers I'm always working with, so we'll see where it goes. I'm Owen Bigland. As always, thanks for watching. Thanks to all my new subscribers. Thanks for everyone who's been buying my book and reviewing it on Amazon. I'll see you next week.